Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show. We try to look at what happened in the market during the previous trading day and then try and learn something from it and then plan for a better trade for the next day. So this is analysis for October 6th, Thursday, expiry day tomorrow, weekly expiry for 2022, and what kind of market we had yesterday. Market bounced up, and the question is, will we survive? Will this rally survive or not, right? And today was a trading holiday, but the US market traded yesterday, and the SGX is also open today and then showing positive green. Right, let's get to the charts and see what exactly happened. So the last trading day, we have a wide range bullish candle, which has moved 2.3% up, 386 points up, and Banknifty has got 1080 points up. That's a gap up, clear bullishness that is very much evident. Right, look at what happened last Friday. So this particular wide range bullish candle is actually following the RBI policy announcement, but it did not sustain the very next day, right? That's because the global cues of the US markets are not doing great. But look at what happened the next day when the US market had done well. It has gapped up and then gone bullish, and now that the SGX has traded today and then it is green, and US markets have bounced up with 825 kinds of points in Dow Jones. Is definitely a continuation of the rally. A reflation in the US markets is reflecting here along with the RBI output. So that's what exactly happened. Banknifty is the same story. Friday's move did not sustain on Monday, but then a gap happened, and then it further moved today when there was a trading holiday here on the SGX. So that's the thing. Let's get into more details. That's 2.2% up, 2.84% Banknifty. Intraday, it was kind of a gap up and then range bound. Gap up, range bound. Nifty and both 100 points gap up and then 300 points, not 100 points. It was a fairly good gap up, more than 1.5%. 1.5% of gap up has happened in both indices, and then it was range bound, 100 points range and 300 points range on the line. That's the price action. So let's see what else we can see. So double top patterns can still be seen. Right? If you look closely, you still have that neckline there that can breach down. Banknifty. This also can be an M pattern. So 2 times it to the top, and so there is a breach that happens between below the 16750. You can say that that's M pattern that is working out. Right? That is still there, and we have the trend line resistance on the weekly candles, rounding pattern on the Banknifty, resistance on the top. We had seen all of this, right? Yeah, the resistance. So medium term, if you look, we are still in a downtrend, right? And there is more chances of that falling towards the next swing low is what we may end up. We don't know, right? Unless this rally is really able to take out this previous swing highs. So if that swing highs are taken out, that's when you think that it's a breakout. Until then, there is every chance that you can create another swing high and then you can fall back. So that's a price action overall, and and moving averages. So we had moving averages. 50 is conquered in Nifty and the Nifty, right? So Banknifty has now only 20 moving average and that need to be conquered, and Nifty also has got only 20 moving average. So 20 moving average closing is now as a resistance. Probably tomorrow, if the SGX nothing happens overnight, we would clearly conquer that. So climbing up the 200, 100, 50 and 20 DMA and then closing green above that on a daily basis or a weekly basis, if it is, that means we are not in for a big crash for at least some period of time. That still not happened. Tomorrow will mostly that would happen. So that's the thing that happened. So there is a recovery that can be seen in yesterday price action, and will further assumed to be continue tomorrow also. Price level points is the 17292 is the resistance. Gap resistance immediately is very close to that. 287 up to that it has reached. So that's the first gap. 17500 would be the next previous swing high above that. Then 17726. 17161 downside support, and 16650, 750, that zone is the gap and the previous swing low supports and downside. Bank Nifty 39,413 is the gap support above, and 39,759 resistance after that. Then 40,000 rounding numbers. So resistance upside, 37,250 swing low. It is a put down, and then 36,808 is a gap support at set downside. So making out of the support resistance levels. So tomorrow, we all since the SGX is reflecting green and the US market has made good moves, we know that these levels, some of this may have breached. 7,500 we may easily breach because it's going to be a gap up, and we may, but whether we'll close above that is what we have to keep a note of that. Now, Bollinger Bands also some small changes happened, which is from the expansion on the downside, it is turned to a contraction, the consolidation. Beginning of a consolidation, you can say, with the bearish bias still because it's below the moving average. That's what is happening in both indices, Nifty and the Bank. Momentum has climbed back to the sideways from the bearish momentum, which is a good thing. Momentum has improved, not. And one thing that we missed to note earlier was that there is a bullish divergence that is there, and on the Nifty, and that has worked out really well. On the Bank Nifty also there is a bullish divergence down here where the price is moving down and the momentum RSI is moving up, so that is there. And the Bank Nifty, it also had a range shift, momentum range shift concept. So bullish divergence and momentum range shift worked out really well, and then an RSI support from there bounces happened beautifully. If you're not aware of this concept, technical analysis series videos are there in the playlist, you can check that. So momentum has caught up really, but trend does not change. Trend remains in the bearish zones, but it is falling strength. Anytime it can cross over to the bull zones. VIX has pulled up really, obviously 122 kind of levels. Now it has come to 90.5, but it's very close to 20, so you have to be cautious extremely. Short covering rally is what is happening, so that's bullish in nature. Both sometimes can be very powerful. Short covering rallies, people will cover the shorts that are done and then turn other way. So all of a sudden, they try to protect, and panic will come in, and then big up moves can happen. That is exactly that is happening. There is a last build up on the futures YI. Options YI is showing a very wide range of 500 points for tomorrow's expiry. Most likely it may be trying to hold the 17,500 tomorrow's expiry. 17,000 and 17,500 is the highest put and call rating is there. Support and resistance seen there. 37,000 and 41,000 is the highest support and put and support and call rating resistances on the Bank Nifty for the October 6 tomorrow weekly expiry. Put call ratio is also bullish, 1.2 and 1.06 in Nifty and Bank Nifty. That's bullish in nature, right? Sectors, all the sectors moved 1 to 3%. That's what has happened, and none of the sectors, major sectors we are talking about. So none of the major sectors are in the bears or in sideways. When you talk about major sectors, we are talking about IT, metal, auto, pharma, FMCG, realty. These are the major sectors that we are considering, right? And pharma is the most bullish. You can see that it is in bullish and momentum. None of the sectors are bullish at all, or in sideways only. But pharma is super bullish. The only sector that is bullish. Heavyweights, all the heavyweights rose 2 to 3% the other day. All sectors has climbed from the bear zone to the sideways, right? Just like all the sectors. Heavyweights have moved to sideways. It's a relief, because previously that was not the case. All the heavyweights are in the bear zones. HDFC, ICICI Bank, and Nifty all are having a momentum range shift in the short-term daily charts, and a bounce up from that has happened. I'll just quickly show you what has happened in one of the heavyweights, which is Nifty. Let's say, see, you can see that the price has taken a shift, shift in the range from the bearish zones into the bullish zones, and then bounce up from there. Same pattern can be seen. HDFC also taking a momentum shift from the bearish to the bull zone, taking a support of the RSI 40, and this is a trading strategy by itself. If you're able to capture that properly, see, HDFC Bank is taking a support of the RSI 40 after doing a range shift of the momentum, and then bounce from there. It also had a momentum range shift. We had talked about that earlier. Yeah, so that's good recovery, and then good reversals. That again, reversal indications are there, the heavyweights and the cross sectors. The most interesting thing that is the Fyers have turned to the buyers the last 2 days. 1,344 crores of buying in the cash market has happened. Second day in consecutive, second day of buying from the Fyers. They has also joined the party and then put in 945 crores in the cash. That's a good thing. Crude oil is rising, it's not good. About 85 it is, and the momentum has climbed bearish in the sideways zones, and it's now 40% from the previous swing low. So this is the buying. If it goes back to the 100 kind of levels, we'll have trouble. November it had crashed big, and then the channel support. Now it's riding towards the channel top. US dollar is still at very high levels, but it has cooled off a little bit. 4% of pullback has happened, and 10.8 is what it is, but it is still at a very, very high momentum place. Rupee is still very big. 81.4 is where we have 1% of pullback. I have some flattish consolidation is what you see, but momentum slightly slipped. Pullback, that's all. But we are still in the danger zones. That continues to be the dollar rising up, and rupee weakening is continued to be a worry. Gold is risen up and then met with the resistance and fallen down. Right, so it rose about nearly 7% of the previous low, and the momentum has now climbed back into the momentum is in the sideways, but it has hit the resistance of the momentum on the below the RSI 60 and then fallen back. But yeah, gold has picked up a lot in the last few days. Hedging is green as of now. We'll have to see that pre-market tomorrow, how it's performing and concluding, how is it closing. US market also seems to be some pullback after the 5.40 bounce up from the previous low. So remember, we had a 22% of fall from the top and on the major US indices, and now it's a 5% of up move that is happening. Whether it will sustain and further move up or not, we'll have to see in the pre-market tomorrow. So remember that the US indices has big significance on the market. And so watch closely and then take the intraday trades and push. So if the US markets are continued to recovering after it hit the major support zone, it is a channel bottom also and a major support zone also. If it is reversing from here, then it will be worth watching for that to make long trades. Let's just quickly see the US indices just to understand what I am trying to say. See this, if you take a weekly, it will be more clear. Price action, see we had tested low, this channel top, plus it's a major support zone, and it has bounced from here, big bounce. So if that is able to take out this trend line channel from the COVID swing high, COVID swing low, so if that is able to try take out that and above, it could hit the major resistance at least here until the 33,000 kind of levels it can go. So it's a crucial point. Will it sustain or not is very important, but the good thing is that once again it has climbed back. That probably is the third time in the last in 2022 also 3-4 times it had slipped and then bounced back. So that's exactly what is happening. Right. So some up move can be expected given that it is such powerful moves that has made. Try to keep a close watch of that. Right. Two long calls, all long calls basically for the stock fix for the next day. Cipla doing good, IndusInd Bank doing good, HUL doing good. Let's look at HUL, which Hindustan Unilever. HUL is a inverted head and shoulder breakout that we had talking about. It's a range shift also, and if there is every chance that it can bounce up from here on the RSI 60 momentum trend indicator rating is also is bullish, and it can give beautiful trade till the channel top with a very good risk reward. HUL. Cipla is in the pharma sector, and it's the only sector, remember, that has got bullish momentum, and it's a box pattern or rectangle pattern breakout which had earlier failed. Now it is kind of confirmation and it's breaking out. Short swing trades can clearly come in. Momentum is bullish, trend is bullish. One more additional, and that is IndusInd Bank. Right. IndusInd Bank has to be traded with caution. The signal has not yet come in. It failed the first to break out of this neckline in the parallel channel, and it's attempting again. This time, if it breaks out, it can give clear short swing trades to 1456 channel top of the trend line. And that's it. 3 topic for tomorrow, not just for tomorrow, few days swing trades all on the long side. Now just to wrap up the story, now we had a Friday bounce up RBI policy last Friday, and that was after a 10% or 8 to 10% of correction that has happened, and it did not sustain surprisingly from the Monday, and Tuesday when the US markets are showing green, it had bounced up, and today it is a trading holiday, and tomorrow we may gap up because the S6 is green and US market has further bounced up from there. So that's good news, positive news, but the question is whether it will sustain or not. We do not know unless and until we clear the previous swing highs on the weekly, the trend line resistance. Until then, we don't know. Anytime it can create a swing high and then fall down again. That's possible. So, absolutely, we have to be cautious. Momentum put call ratio, Fyers are buying. These are all positive things for the bulls. But the trend indicators have not changed even in the short term. Not yet. Tomorrow probably it may change the trend, and price action also on the weekly basis on the medium term. As I said, it's not. It's on the bearish side, right? And we're not at the bull rallies unless we clear the previous swing highs, as I said earlier, right? So the market views for tomorrow is bullishness, but bullish because the charts are saying that gap up can be expected because US markets have moved big and then it's just reflecting that, so no doubt, but you have to be cautious. If you're taking swing trades a few days and things like that. US market just earlier breached major supports, did a correction of 22% nearby, and then now it has bounced 5.5%. That's all. Unless and until the trend line channel from where it had slipped down, if it's not able to climb up to the channel top, the downsiding trend line channel new one that we saw earlier, if unless that's clear, we still have not to worry, you have to closely watch. Because dollar is shooting up, rising up, all the global uncertainties continue to be there, and that's reflecting the VIX. It's never ready to go below the 19 levels, right? It shoots up to 21 one day, next day it comes to 19.5, then again 21. So VIX is very close to 20. We have to be cautious. Simple. Rupee is weakened to 82 kind of levels. It is still having that same momentum. Nothing has put off. The crude oil, there is only relief that is there. It's shooting up back after hitting the channel bottom. So levels to watch is 16,650 and 37,000 on the downside. Market may be consolidating for some time, but I believe in this range between 18,000 and 17,000 for some time, rather than giving that 17,000 crash downside to the 16,700 is what we did last week. So that kind of that's the kind of level 16,700 or 17,000. So market is not ready to go below that level and go back to that. So if something really bad happens in the global markets are closed, then we just have to follow that. So unless that does not happen, we just have to make that 16,650, 37,000 kind of levels. And upside, we know where the previous swing highs, trend line resistances are there. Just have to keep a close watch on that. So if the momentum is not falling down and once again climbing back to 20 levels, just stay out of the market if you're there. Here it is an options trading, and if you're an novice, right? So that's dangerous to play even in the intraday. You will not be able to protect its adjustments properly in proper time, because it may be very swift moves, and overnight risk do not take and hedge your positions, as I always say. Protect your capital. All that we can do is risk manage. Cut short your position size if you really want to trade mandatorily, right? And protect your capitals using the option strategies or gold or things like that, right? We have videos on the playlist that helps you do that with cover calls or and several strategies are there where we can protect your quality investments and gain and get rental incomes, right? All that can be done. So play safe and enjoy the rally as long as it sustains. I hope this helps you to frame a view for the next trading day, and if it helps you in some way, consider the like button and share to maximum. We have very few subscriptions. Appreciate the help. Thanks for watching. Happy trading. Happy learning. Bye bye.